Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, all I can say is, boy, what a difference 3 zeros can make. Did you see what happened today? Traders, if that is true, and I don't know that that room is true 100%, I mean, they're saying it is. If it's really true that the reason why we went down today as quickly as we did, 100+ points in the S&P, 1,000 points in the stocks, if it is because some nut job put 3 extra zeros on an order, then we don't belong down here in the S&P. We belong right back up where we were before that error took place. And that also means the bonds did not belong at 124.16 or 15. They got up there somewhere. They belong back below 120 if this rumor turns out to be a fact. But boy, oh boy, all I can say is, what a difference 3 zeros can make. Traders, this video is coming to you. Oh, you see that? I almost got attacked with like a wombat. This video is coming to you on Thursday night for trading, May 7th, Friday. This is video number 583, baby. Yeah. And once again, we have no editor, so I don't know what you're getting, but you're getting a video tonight. All right, traders, listen. Bonds should go right back down. Stocks should go right back up if, in fact, that was an error. Now, if it wasn't an error, it's almost unexplicable or unexplainable what would have made the S&P drop 100 points and then turn around and take half of it back. You know, that doesn't happen for, it usually doesn't even happen for any fundamental reason. So the odds are good that we're going to find out that something insane did happen in the computer system. But we'll see. What I have to tell you is this. First of all, soybeans are still bearish and we think they go down again today. We think the bonds, if in fact, once again, those 3 zeros really were put on the end of an order, bonds down, S&P up. I'm also here to say this. If it turns out that this is not true, then you probably don't want to be touching the S&P, at least for the first few hours, because here's what should happen on Friday. Right now, you have a lot of people on this planet, especially in this country, that did not know how much margin money they were going to need today. And what happens is this. Early in the morning, brokers get to work 6 a.m. and they start calling every single customer that they can think of. I'm sure they end up with cauliflower ear at the end of this day. They're on the phones with customers going, Mr. So-and-so, you got a huge margin call. Would you like us to liquidate or are you going to send in money? You have till 11:30. Let's get it in. And most of the people out there go, no, get me out of that. I don't have the money to put in. Or they say, sell out my commodities, sell out my other assets, pay for my stock margin. Either way, markets usually come down. It's called forced margin liquidation. If that was not real, you're going to get a lot of forced margin liquidation. If, in fact, we came off because of Italy, Spain, Greece, that whole European problem. If that's why we broke, and I don't think that was it, I do actually believe something happened here. Well, then we got a problem, traders, and we're going to end up going down a lot at the beginning on Friday. And then a lot of times, a day like that, once the phone calls stop and people stop panicking, you end up going straight back up. So I think 2 things. If this is definitely an error, we're going straight up. And even if it wasn't an error, after the forced margin liquidation, we're going to recover again. It should happen. Then the only other wild card is, and I'm not thinking this is going to happen, but there's a third wild card. What if we start heading down again on Friday, traders? It's going to be a Black Friday leading into an uglier Monday. So boy, oh boy, is it going to be interesting out there. I'm not betting on the downside, to be honest with you. I think the bond's off and stocks back up. That's the way I'm going to at least start off. I'll do some probe trades. Maybe we'll see if they work. Little stops. See if that works. And if it does, then we'll start to play the game. So be careful. It's going to be really, really dangerous out there on Friday. Another thing I'd like to talk to you about. Traders, you know that little story I always tell people that a stop is your best friend and always place your stops first? What do you think happened to the people today that trade without stops? Do you think they even have accounts left? Do you think some of them lost their homes? I think they did. What do you think happened to the people today that didn't put their stops in first that might have tried to buy? There was a certain point today in the S&P that if you bought without putting your stop in first, it probably was down 10 or 15 points before you even had a chance to type your stop in. Then it goes through your stop before you get it in, and you got to cancel it and put it in another spot. You could have been tagged big time today just getting long without the stop first. Today is a perfect example of placing your stops first. Why? Traders, had you placed a sell stop first in the S&P, then hoped to put your buy order in, that sell stop would have been hit. You would have been up 10, 15 points in the S&P before you even had a chance to put your buy order in. So it would have worked and made you profit had you put your stops in first. At least put your stops in if you don't put them in first, because if you were in that market today and you blinked without stops in, you blinked away a lot of money. Traders, futures trading is very, very risky. It is not suitable for all trading accounts. And a day like Thursday, what you witnessed, that should make anybody be afraid of these markets. So have your stops, have a lot of respect for these markets, and be really, really careful on Friday. If we start to break hard, remember that in the morning, that's expected, forced margin liquidation. If this was completely false, I don't think we break at all. I think the S&P goes straight back up. A lot to be watching out for tomorrow. So we will start off with a neutral to bullish posture in the S&P. We're already short the bonds, and we're looking to get into the soybeans on the downside. We'll see what happens. We did a video for you last night. We mentioned soybeans downside. Those things broke big on Thursday. I think there's another day coming Friday in the soybeans downside, so let's see what happens. All right, traders, there are so many great charts I'd like to show you, but without my editor, we don't want to show them up and edit it for them, so we'll use our editing skills and it won't look very good. So we'll wait for Mikey to come back. Hey, everybody, a round of applause for my Mikey. This kid is fantastic. Series 22, we hope you get better, buddy. Our prayers are with you. All right, traders, that's about all I'm going to do in this video. I am going to tell you this. I'll be at my site all night tonight, all day tomorrow. It's www.livewithoscar.com. Jump into the free chat room. Hang out with me, traders. I will be there to help direct you and help you in any way I can. And we'll be there checking these markets out. All right, traders, don't forget, keep your emotions out of this thing because, boy, oh boy, our impulse trade's going to go crazy on Friday. One of the best things you can do to keep your emotions out of trading is to get your stops in and get them in first. Don't forget, traders, this other thing that you can say could help you too. And I want you to say this to yourselves over and over again, especially in these markets right here. And you know what that is? Stops are in!